Hello, everyone. Thank you for joining. And today we are going to discuss about economic diversification in the region. I am joined here today by some really expert panelists. With me is Nasser Al-Tawil, who is leading the economic diversification discussion in Qatar right now. He will share his views. Then I have Hasnan Malik today with us, who is joining us from Dubai. He is the head of research at Telomere Research and has been in the region for about more than a decade. Akbar Khan is also our very well-known investor locally. He heads Al Rayyan investment team and has been investing in the region for also about more than a decade now. So we will have different people. We have a government policymaker, we have a macroeconomics research analyst and fund manager who have been looking into the region and will be looking at investment opportunities in the region. So let's discuss as we move forward. I would like to move towards the main part of our discussion, where I wanted to build a little bit of context of where Qatar has been and what do we think have been the best performing sectors, because the discussion will focus on what does the future hold for us. So Qatar has seen fascinating growth over the last 18 years. If you had $1 million back in 2002, you would have easily multiplied it by more than 5 times compared to other markets in the world, be it S&P or FTSE. But what's even more fascinating is that the banking sector has been phenomenal. It has done even better than the benchmark QE index and in the last 1 decade. But the consumer sector has actually been outstanding. So the data is pointing towards the growth comes from consumer sector underpinned by growth in population. So for policymakers, for people who are looking at what diversification means, in order to see growth, the data shows that consumer sector will grow if diversification is designed to further expand the population base. With that, I will pass on now to Hasnan Malik, head of research, who will be providing the insights into how he sees the regional economies are doing. So Hasnan, welcome to the webinar.
Mohsen, thank you very much. Thank you everyone for the opportunity to share my views on the region and specifically on the issue of diversification. To give you an idea, this is a small slide presentation of about 10, 12 slides. I should be able to run through this in about 8 or 9 minutes, and then we'll revert back to Mohsen. And I'd love to hear the audience's views on some of the ideas here as we go through the Q&A later on. Okay, Mohsen, if we can go to the first slide after the title, please. The simple thesis here is really 3 points. First of all, low oil prices make the old economic model, one based around a lot of sovereign wealth, oil and gas revenues, very lucrative provision of welfare to the citizen base, a reliance on expatriate, cheap expatriate and flexible expatriate labor. All of that old model comes into question when you've got oil prices that are, $40, $50 and lower. The second point here is that I think that diversification across the GCC may now be reaching its limits. And from here, further high returns on new capital invested into diversification from a purely financial point of view, I think look difficult. And then the conclusion of the argument is that if you accept those 2 premises, that the old model is troubled, diversification is difficult, from an investment strategy point of view, it actually suggests to gravitate to the one market in this region that can most easily sustain that old model. And even though, sadly, there doesn't seem to be any sign of the geopolitical blockade and the division within the GCC ending for Qatar, it certainly, to me, appears as if Qatar has the financial resources that are so much more deeper than anyone else in the GCC relative to its very small citizen base to keep that old model going for longest. So that's why, although this is a region that I'm not that enthusiastic about, and my perspective here is I cover global emerging markets, I do think within the region, Qatar is far and away the most interesting play. Mohsen, may we go to the next slide, please? So just to reinforce that point about what it means when you're seeing these low oil prices. Oil price currently is, let's say, in the mid-40s. The operating break-even for most of US shale is around $50. For almost all of the GCC, we've got fiscal break-even prices, so the oil price at which the budget of governments breaks even. Those fiscal break-even oil prices are far in excess of the current market price of oil, the exception being Qatar. If we have a look at the next slide, what it will show you is that when you look at that perpetual ceiling to oil, it will be there, which is US shale. So whether we are seeing cooperation, which is in the last 2 or 3 years unprecedented between OPEC and non-OPEC suppliers, of course it misses out the third player, which is US shale. US shale doesn't act as an organized cartel. It isn't sitting at the same negotiating table as super OPEC, and therefore is not subject to the same constraints or disciplines. And as long as that industry is there, it may be that at $30 oil, US shale turns off its taps. But as soon as oil starts hitting again $50, $60, you naturally see those taps opened up. So where I first focus on this region when it comes to diversification is to consider the factors of production. To put to one side that there is this existing social and political model in the GCC. If you just looked at it as a geographic region with various factors of production, how does it look? And of course, the first most compelling factor of production in the GCC's favor is abundant fuel, extremely cheap supplies of oil and gas, the cheapest globally. If we have a look at the next slide, the second factor of production you might consider would be water. And one of the toughest issues in pursuing diversification, particularly industrial diversification in the GCC, is the extreme shortage of water, the incredibly inhospitable climate in which people live and operate and run businesses in this region. On the next slide, we go beyond water and we have a look at electricity. Because of this very hot climate, that means that actually it's a very expensive place to live because electricity consumption per capita is so high. It's so high because obviously air conditioning. And so there is neither a cheap supply of water, a plentiful supply of water, nor is there at market prices, market determined prices, necessarily cheap electricity. If we have a look at the next slide, we look at a fourth factor of production, which is human capital. And this region really is constrained by two factors. One is the sheer numbers of people available as a workforce, which is to do with the small populations. And the other is not so much the skill set, but the fact that there is this legacy of quite a lucrative public sector in the GCC. Because of that legacy, what that has meant is that the salary or the compensation differentials between expatriate labor and citizen labor remain very high, 2 to 4 times depending on education levels. And that means that the issue compared to say 20 years ago is not necessarily that there is a shortage of qualified labor in the GCC. No, it's rather that there is a lack of incentives that are strong enough to push that qualified labor out of the public sector and into the private sector. And for companies looking to locate in the GCC, the challenge is high wage costs of citizen labor. And clearly we've seen plenty of evidence in recent years, really stemming from 2008 onwards, but we've seen it spike again in Kuwait as an example this year, is this growing unease with the dependence on expatriate labor. We have a look at the next slide. We talk about not a factor of production, but the, if you like, the price of the economy, the competitiveness of the exchange rate. Two measures here of exchange rates across the Gulf. One is the measure of real effective exchange rate as we see it today versus the last 10-year average. And if you look at most of the GCC, again, except for Qatar, most of them are a little more expensive than they have been over the last 10 years. If you look at the picture on the right-hand side of this chart, that shows you what sort of change you would need to see in today's currency pegs to bring those real effective exchange rates back to 100. And just to digress and quickly explain what a real effective exchange rate is, it's essentially looking at the cumulative change in inflation between one country and its main trading partners and how exchange rates should reflect those changes over time. And if you look at the GCC, while the currency pegs have served this region very well in terms of establishing credibility of institutions like the central bank, it is served the region well in terms of managing inflation expectations. As the region now tries to change from one largely driven by one sector, which is oil and gas, to an economy driven more by not just the private sector, but by a multitude of other sectors, which will include export-oriented sectors because, again, of the small domestic population size as a consumer base, a competitive exchange rate matters. And I would argue that while there's no immediate risk to any of these currency pegs, if the GCC really wanted to accelerate its export story outside the oil and gas sector, arguably, not only does it need to address those factors of production we talked about, particularly water, electricity, and cheap price skilled labor, but also, I would argue, relatively uncompetitive exchange rates. If we look at the next slide, another structural issue, which is we're beginning to see some action taken on, is a low tax base. And one of the things I'll start to touch now in this discussion is the lack of coordination. We're going to have a situation, I think, over the next 5 years, as diversification strategies are emphasized more and more by every GCC country, where to a degree there's going to be competition on issues like residency visas, foreign ownership rights, and taxation. And you saw an important demonstration of that earlier this year with Saudi Arabia's move on VAT to hike to a higher level than anybody else. But certainly tax collection as a percentage of GDP, again, that matters if this region is truly to move away from a dependence on oil and gas revenues specifically. If we have a look at the next slide, again, just some broad comments on what I think are some of the real limitations of diversification strategies in the GCC. The first is, it always seems to be the same recipe, whether it's a Vision 2020, 2030, 2035, 2040, it always seems to come back to transport, tourism, entertainment, offshore finance, off-plan real estate. And that drives inevitable duplication. As I said, there's, I think, going to be an arms race. There's going to be a competition around tax. So is there availability of free zones? Will there be differential rates on VAT? Will different sectors and different GCC countries have different rates of corporate tax applied to them? And will that drive not just arbitrage opportunities, but more importantly, confusion and further fragmentation of what is already a fairly small trading zone measured by population? And then other issues, we have obviously, two very major issues when it comes to duplication. One is a virtual blockade of an important piece of the GCC, which is Qatar. We have division over wider regional foreign policies. But we also have another issue, which is the physical proximity of cities, put countries to one side, but cities that are adopting similar strategies. So we have Abu Dhabi only an hour's drive away from each other. We have Bahrain and the rest of Saudi, where Saudi is now developing some of these other sectors, which previously, in previous generations, Saudi citizens and Saudi businesses may have gone to Bahrain for. And that drives inevitable excess competition, duplication, and cannibalization. If we move to the next slide, the other way of looking at this is, okay, if we can demonstrate that there are real challenges to diversification, let's turn the question around. Who can actually keep the old model going for longest? And there are two ways I look at this. One is to look at the size of how deep pockets are relative to the size of populations. So if you look at FX reserves over citizens, or if you look at FX reserves and sovereign wealth over citizens, that gives you an idea as to how deep the pocket is to keep the old model going. And that's really where Qatar stands out, far in excess of anyone else, with far deeper levels of sovereign wealth and FX reserves per citizen, so on that very small citizen base. And that's essentially why I argue that Qatar could really keep the old economic model going for far longer than, as we all know, the likes of Bahrain or Oman, but even the likes of Saudi, Kuwait, and to a lesser degree, the UAE. If we have a look at the next slide, not so much on citizen welfare and subsidies, but on the specific issue of the FX pegs. A way to measure the robustness of an FX peg beyond whether it's credibly defended or not in terms of institutional capacity is just the raw number of FX reserves relative to the amount of money supply. Another way of looking at these charts is to simply say, well, if you took every 3 or 4 Qatari riyals or UAE dirhams and you took it to the central bank, does the central bank actually have enough dollars to give you back if everybody did that? And that's what I mean by FX reserve cover of money supply. On the left-hand side, it's just FX reserves over 2 measures of money supply, M1, and a broader one, which is M2. And on the right-hand side, it's not just FX reserves, but it's also sovereign wealth. Cheating a little bit because sovereign wealth includes some relatively illiquid assets that can't easily be converted. But just to give you an idea of how robust, relatively speaking, these pegs are across the region. And again, acknowledging that there is no pressure to change these today. If a country wants to keep the old economic model going, as I say, built on oil and gas revenues, sovereign wealth, welfare provision, subsidy provision, and overseas investment, these pegs don't have to go. But if an export industry is a priority and an export industry outside hydrocarbons, then a competitive exchange rate is required. As I say, this looks at it the other way, just to say, well, who could maintain their peg for longest? And essentially, this is looking, if you look at the right-hand chart, suggests that Qatar, along with Kuwait, arguably have some of the least risky currencies in this region. If we look over the page, this is just a summary of views across the region. I won't go through all of this, but just to reinforce the point that my argument is, if you believe that oil remains relatively low, and let's define that as just being far lower than the average fiscal break-even oil price in this region, then the old economic model is under stress. If you look at the level of reserves across this region per citizen, or as in terms of money supply units, Qatar far and away is the one able to sustain the old model easiest. And that's why, even though Qatar sits in a position where it's still under this blockade, it still sits on the other side of a divide within the GCC, as an investment strategy for someone who had to be invested in the GCC, for me, Qatar would be the lowest risk bet in that environment. Those are the end of my prepared remarks. Mohsen, I'll hand the call back to you.
Yeah, just to share the disclosure and disclaimers also from Hasnan. And I think take the discussion forward and would like to move towards Nasser. So Nasser, I think you're heading obviously the discussion on diversification, the future of diversification in Qatar. And you saw, I mean, earlier we showed in the last 20 years or 10 years, what Qatar has achieved, which sectors have outperformed the general market. This is the current shape of market today. It's largely dominated by banking sector, and then you have industrials and consumers and other sectors as well. So, and as Hasnan has argued, that it is not very likely that the governments would be able to diversify. So what's your view? Obviously, you're looking at how we can diversify the economy. Please.
Thank you, Mohsen. Thank you for having me. And just a minor correction, I'm not leading diversification efforts. I was part of several working groups that was looking at how to diversify the Qatari economy. So let me just reflect on your question, and by in fact asking another question. Whenever I start speaking about diversification, I like to just define the word diversification a little bit, because to different people, it means different things. And it is true, to be honest. There are so many components in diversification that it may not be very easy to have it in one definition. However, if I want to try to define diversification, I would say economic diversification is a process that shifts an economy away from a single income source to multiple sources. So what this tells us is basically your economy being the eggs should not be in one basket. That's in essence what diversification is doing, if you are looking at it from an income perspective. Now, with diversification, there are more things that do come, like the creation of jobs and opportunities, the attraction of FDI, and what have you. I'll come to those in a second. But let me just reflect on that definition, as we are shifting an economy away from a single source of income to multiple sources of income. There are two different ways of how countries do this usually. There's what is called a vertical diversification and a horizontal diversification. So a vertical diversification talks about existing sectors that you have them today, and these existing sectors, you're trying to boost them, or you're trying to add more of the supply chain to that existing sector. For example, let's say that you have an aluminium sector, and that aluminium needs one more additive, for example, in order for it to be sellable in X or Y number of countries, additional to the kind of raw material. So you do that business in the state, and you expand your offering to another. So what you have done is basically have tried to expand your business by allowing for a new or an expansion of that business within the sector that you have identified or you're working on it. A vertical diversification, on the other hand, is where you increase the throughput of a certain industry by creating more clusters. So what you're doing is you're creating more clusters in the economy. You're creating more business and more opportunities that were not existing before. It is, just to be comprehensive in terms of talking about what is diversification, how do we achieve it, and what do we do about it. It's also a very debatable point as to how you measure your diversification, or whether you say that I am a oil-based country versus a non-oil-based country, and what have you. To me, to be honest, there's no one single factor that you will look at and say, hey, I'm a diversified economy, and therefore, because I have done one or two or three. In fact, I think that you need to look at different indicators. You need to look at, for example, contribution of oil versus non-oil sectors to GDP. You need to look at the contribution of oil revenue to total government revenues. You need to look, for example, at the contribution of non-oil export to total export earnings. So what are you exporting? If you're gaining in a fiscal year $10 billion, are these coming from selling hydrocarbons or non-hydrocarbons? The relevant contribution also of the private sector to the public sector in the GDP. That's a very, very important indicator, actually. Usually in the GCC region, you will see that the main driver of, let's say, take one aspect, procurement, is usually the governments. If you see that most of the GDP is attributed to governmental activities in a way or another, or hydrocarbons mainly, but even if it's not hydrocarbons, it's mainly attributed to governmental activities. Another factor that I would look at to assess whether we are still an oil-based country or a diversified economy is the instability or volatility of the GDP to oil price instability. So in the COVID situation, things have dropped. Let's look at our GDP. Has our GDP dropped accordingly with that oil prices or not? Then you will be able to even have a view of whether you are a diversified economy or not a diversified economy. Let me also just say, add two more points. Diversification is not something new, by the way. It has been there for a long period of time. And we have succeeded in certain aspects, and I'm talking about Qatar. We have succeeded in certain aspects. We have succeeded in building certain clusters. And I would call these clusters the national champions, because they are, to be honest, in my humble opinion, they are the way forward. If you want to continue with diversifying your economy, you need to step on a solid ground in order for you to move forward. But in any event, despite that, I claim, or according to what's available there, diversification has started in the GCC region since the 2000s. So we're almost, 20 years into diversification, or the efforts at least to diversify the economy. In my opinion, still we are far away as a GCC region as a whole. We're still far away from actual diversification in the way, at least, it is being discussed, in the way that we would apply these factors that I have just mentioned. If you look at GDP, if you look at the contribution of private sector, etc., we're still way, way behind, because I mean, look at the COVID situation, for example. The COVID situation has forced the oil-producing countries to, reassess their fiscals, to reduce costs, and this is a very good indication that these budgets are still heavily dependent on basically hydrocarbons. I'll probably finish with this point, just not to take more of everybody's time. Why is economic diversification important? So why are we making a big fuss out of it? Seriously, I mean, it's a very valid question. Sometimes some people who believe a lot in diversity, they think it's a very obvious question. But to be honest, I don't think it is. Although a believer in diversity, I don't see that question to be as obvious. There are certain policy decisions for countries who decide to diversify. And these policy decisions are sometimes not easy because they may have a social implication. They will certainly have a financial implication. They will have an economical implication. So each country needs to look at diversification from their own lens. Let's take the situation of Qatar as an example. Qatar is relatively a small country in terms of size and relatively also small in terms of population. So if you want to tell me, if somebody says, I want to diversify the economy by increasing our GDP to say, we want the GDP to be 40% hydrocarbons and 60% non-hydrocarbons. Just the only question that whenever I hear this figure is that, do you know how much people will need to come to live in Qatar in order to turn that into reality? Will your infrastructure be able to accommodate all of this? So why am I saying this? I'm saying this because when we look at diversification, we need to look at it from a realistic perspective as to what the country can accommodate over a certain period of time and what strength points they can step on it. Now, obviously, let's say that we have determined these factors. I would say that one of the basically benefits of a diversified economy is number one, profits. Or revenue, let me call it, and then I'll talk about profits, but revenues, you have diversified your source of income. If today a person owns 3 properties and they are renting them for 10,000 riyals per month, something happened with the property industry, they dropped to 5,000 per month, you have lost 50% of your revenues because of one single incident. Again, all the eggs in one basket. With diversification, what could happen is basically if your oil prices are affected, your other production or products that you're producing to the market, be it services or actual physical products, may not be as much affected. Hence, you're still a source of revenue. And governments usually will make out taxes from these revenues. One very important aspect of diversification is developing the private sector. See, the private sector in the heavily oil and gas or hydrocarbon-based countries is less developed unless you're looking at it in the sector of oil and gas. Why? Because there's a lot of dependency on the government that the government is going to spend. The government is going to continue to be, the biggest procurer and economies and what have you. A very important, and here where I see it as a social benefit, at least for the locals, is basically create more job opportunities. What happens with diversification is if you started creating a cluster or talking about creating a certain industry within a country, is that you create jobs. With these jobs, basically, you will have opportunities for your people and as well as from people outside the country, along with the FDI attraction who may be willing to invest in such projects. One very important thing that I think all GCC countries do suffer from is the retention of capital. So retention of capital and transfer or remittance outside is just a habit in the GCC countries because for all sorts of reasons, right? But one of the things that you can do with diversification is you can provide more opportunities for investors, for companies, for FDI, and even for individuals to retain their money in the country. I'll stop there. Sorry if I've taken a little bit longer. Mohsen, to you.
Yeah, thanks a lot. And I think now we have sort of 2 opposing views in the sense that, okay, Hasnain believes diversification is difficult to achieve. And even though Nasser is not leading the conversation, but he's part of the conversation, but the idea is to, yes, go into diversification, even if it has social implications, financial implications, and what are the things that the government needs to look after or look into when they embark on this diversification. Akbar, I would like to move to you. You have been investing in the region for the last 10 years, more than a decade now. What side of the argument do you subscribe to? Because it obviously has implications on your investment strategy, and you are managing a GCC fund, you are managing investments for your clients. What are your views in terms of possibility of a diversification, and then which sectors will actually perform?
Sure, thank you for that. So I think just to go back to one of the points that Nasser touched on as well, is in terms of, Nasser talked about diversification is about not having all of your eggs in one basket. So let's for a moment imagine a situation where there was zero diversification, which means that countries of the region would just be producing oil or just be producing gas or whatever their mix of hydrocarbons that there is. Their incomes would just go up and down based on the price of the commodity that they sell. Perhaps you do a little bit of vertical integration as Nasser described, so you do some petrochemicals and other bits and pieces. But by and large, let's say that's all you do nothing else. That's more of an abstract concept because by definition, if you're going to run an economy, then you need banks and you need somewhere for people to live and houses and schools and etc. But if the focus is just literally to do oil and gas, you would have, given these are not labor-intensive businesses, a shortage of jobs. So the citizen population, because in this example there'd be very few non-citizens, citizen population wouldn't really have a lot to do, and perhaps they don't need to because you'd be saving so much money. You'd be running surpluses for your budget surplus, you'd be having current account surpluses. Maybe you just subsidize the local population. For some, it would be they'd be very happy, and some maybe get very bored. But that is one extreme. On the other extreme, where you have a far more diversified economy, and I guess in the region we have an example of that, which is Dubai, largely because there is not a lot of hydrocarbons, and that is the point I was going to get to is if you just stick to doing one thing, which is to rely on hydrocarbons, this is not an infinite resource. At some point, they will finish. In Qatar, Qatar is blessed that at the rate that Qatar is taking gas out of the ground, the reserve will continue for, well over 100 years, which is far longer than any of its neighbors. Bahrain and Oman have issues much more quickly. So the point is that you need to find new sources of income because your current source of income isn't going to last forever. And even if it does last for 100 years, there may not be demand for the thing that you take out of the ground. So the price of it may collapse, whether it's because of technology, because of solar, because of, in our case, electric vehicles, what have you. So just because you have it doesn't mean that it generates the income that it used to. But to come to your point, Mohsen, as to how do we look at this, essentially our job is to make money for our investors. We don't necessarily need to get into the conversations or the policy decisions which take decades to fulfill and decades to mature. But the countries which have the greatest push towards diversification offer the greatest investment opportunities for private investors such as ourselves. In one, obviously, key source of financing for private companies is equity financing, which lends itself to IPOs and having more companies listed on the stock market. So countries which have greater ease of doing business, which have better regulations, will have a more prosperous and blossoming private sector, will have more IPOs, will have greater capital markets, which from our perspective as an investor gives us more choice as to what we want to invest in. So to go back to your charts earlier, of the fantastic returns that investors in Qatar had if they invested in banks or if they invested in consumer stocks. It was fantastic, but unfortunately, the number of stocks that you could invest in to capitalize on this was and remains very, very limited. There is no proper way in Qatar to take advantage of discretionary spending. There are ways to take advantage of non-discretionary spending. We have Almira, we have Widam, we have Zad, we have Baladna, which is non-discretionary spending, but we don't really have ways of taking advantage of discretion. And there are many other gaps, if you like, in Qatar and other countries in the region. So in terms of how you can invest in the UAE, for example, there's virtually no way to invest in the growth of the domestic oil and gas sector. So there are gaps in many places. So from our perspective, the way we look at it is that diversification allows us to tap in, allows us to take advantage of private businesses or privatized businesses. It could be government-owned businesses as well, which are listed and have stakes on the stock market. It allows us to take advantage of those opportunities across a more varied and diverse range of businesses, which, depending on where we are in the economic cycle or global situation, means that opportunities come up in different areas. So as an example, during the lockdown, which we are going through still, because we're still not fully out of it, there are some companies that are clear winners and some companies that are very clear losers. If I just take Qatar as an example, but food and food-related companies across the Gulf have had the best 6 months probably ever, because we've all been sitting at home, we've not been going to hotels, all our food consumption is from supermarkets. Food companies sell to us at much higher margins than they sell to hotels and restaurants, etc. And because we're all sitting at home, we're consuming a lot of food. So a lot of these, some of these companies, Almira, for example, in the second quarter of this year, had the best 3 months of sales in its history. It's not because oil prices are $100. Obviously, they're at 40, 45, but that doesn't bother Almira. There are other companies in Qatar or elsewhere in the region, particularly industrial companies, that have been very, very severely hurt because of the lockdown, because of the quarantine measures, because of the difficulties with having labor move around, who've been suffering. If you go back to 2015, when oil was very depressed, there were also some winners and losers, but they were different. In 2015, for example, we made a lot of money investing in the Saudi, in certain companies within the Saudi health industry, because oil can be whatever it likes, but people still need to go to the hospital. So our job is to look for opportunities regardless of where the market conditions are. Obviously, in a situation where the entire market is dropping, that isn't helpful. So our job is to try and do better than that. But even then, there will be opportunities that arise. Now, if you have $100 oil, yes, there will be. The opportunities are, frankly, investors don't need to come to us. Anyone can just put money in any stock in the stock market, frankly, and it'll probably make a lot of money in our region. But when oil is 30, 40, 50, as Hussein mentioned, below budget break-even levels, then you have to have some more difficult decisions as to where you allocate as an investor. So my personal view is that diversification is important for fundamental reasons. I guess the question, and this is what Nasser and his colleagues in the teams that he's working in, is to understand the shape and the scale and the extent of the diversification and how much of it is horizontal, how much of it is vertical. And I guess once that is better understood, you then figure out how to enable that. But the simplest way to enable diversification is to make it easy to do business and easy to set up businesses, and for there to be the ability and the desirability for non-citizens to live in the country, live in your country, because otherwise you just rely on your own people, which is perfect if you're Saudi Arabia and have 20 million of them, but not perfect for the other countries in the region which don't have 20 million of their own people.
I would like to go back to Hasnan, I think, at this point, because Nasser also mentioned that as one of the requirements for diversification away from hydrocarbon, and using his example of 40% versus 60%, that really has huge implications on the number of people the governments and the host nations are willing to accommodate in productive sectors, obviously, and hopefully also not in blue-collar sectors only, because if you need to diversify your economy, if you want people to spend in your economy, as we saw in the consumer segment, you want to create more companies that will sell services to the people who come and live in the country. It cannot just be focused on blue collars. It has to be white collar jobs and sectors as well. Now, that will require, so for example, if I subscribe to Hasnan's thesis that it's not economically feasible for companies to, for countries to diversify because the return on investment is actually negative. But let's say for the larger well-being of the country, for countries to continue to provide jobs for their citizens and keep the economic activity going, at some point, I think somebody will, the government will need to subsidize the development or diversification of other economic sectors. So this slide, Hasnan, if I was to turn the question around, but with the same data, that if countries need to subsidize diversification, then isn't Qatar, UAE, for example, or Kuwait, well positioned to do that?
Yeah, Mohsen, I think that's a very fair comment in that those three countries have sufficient sovereign resources to drive that entire diversification strategy on their own. The problem is that what that will end up doing is going from one picture of the economy dependent on hydrocarbon revenues and the public sector to another version of the economy with non-hydrocarbon revenues, but still a total dependence on the public sector. A subsidiary issue is whether the public sector over the long term is as innovative and internationally competitive and as receptive to economically driven foreign investment, so partner capital coming in and partner management coming in, as the private sector is. So you're absolutely right that you can turn this picture on its head and say, well, actually, forget about keeping the old model in place. What about financing the new model? You're absolutely right. Those three countries have the ability to do that more easily than others because they don't have so many citizens and citizen welfare and subsidies to support on a per capita basis. But I'm not sure that that gets over the question of, well, is this a region that naturally will attract industries outside oil and gas?
Yeah, and I think that's the perfect question for Nasser. Because I think, Nasser, I think that is what we are trying to do, that if we need to diversify, we will need to, to some extent, finance that diversification. But then, as Hasnan said, is this region naturally geared towards attracting that kind of talent that is required to develop these non-hydrocarbon sectors?
Yeah, thank you, Mohsen. I think this is a very, very important question. But just allow me to comment on the basically the heavily dependent economy on hydrocarbons and moving away from that hydrocarbons. Listen, no one disagrees probably with having the information and the data before them that we need a lot of torque and a lot of push to leave or to move towards more diversified economy. This is not an easy task. This is not something that's going to happen over a day or two or even a year or 10 years. This is a continuous effort where you will need to build new sources of revenue, you need to build new sources of income, and you need to build clusters. So allow me just to reiterate now or to go back to your question on whether this region can actually do it or not. Listen, each country is different, right? I wouldn't take it as a region per se, because the strengths and weaknesses or challenges of each country differ. The other thing is also what needs to be taken into account are the policy decisions. So as I said, with diversification, you have a lot of policy decisions that need to be taken, right? If you take this as an example, you want to attract FDI, right? Okay, how much are you going to attract FDI, and what rights or privileges or incentives are you going to give them versus the local investors who have been investing in Qatar and owned by local investors for the past 50, 60 years? That's type of policy decision, and these things are not easy to be done. Therefore, what you need to do is, rather than splitting the same cake, is expanding the cake. And this is what, at least I believe in to be done. So just to tackle your question, I think there are three different ways of how to basically what the region and Qatar specifically can do in terms of diversifying their economy. One of the things that Qatar has been doing in the past is building on its own downstream or oil and gas industry, downstream of downstream. And you have seen probably the aluminum, you have seen the fertilizers, you have seen all the petrochemicals kind of industry that's very well developed in the state of Qatar. And that is part of diversification, because again, if you go to diversification, the question is that from what? Diversifying from oil and gas, right? So there's a step, basically. Oil and gas are crude. You have the processed, basically, or where oil and gas can be the main contributor to other products, which is called usually downstream of downstream, just like fertilizers. So that's the first thing, is to build on basically what you have in terms of oil and gas industry. The second, I think, element that's very important is to build on the national champions. The national champions in Qatar, for example, you have them in the different sectors. For example, you will have Qatar Airways for aviation. You'll have Al Jazeera for, as a channel, as a network. You have, sorry, I forgot the name of the company. Qatar
QNB.
Navigation, sorry. QMB, here you go. You want to mention QMB. I was avoiding for Akbar's purposes not to mention QMB, but here you go, QMB. You have QMB, you have QIC, you have Qatar Navigation, you have Naqilat. So all of these actually are national champions that have been created by the state of Qatar over the past 10, 15, 20 years. And this is, to be honest, diversification, if you want to look at it in a way or another. However, is it diversification to the extent that are required to reduce your GDP again to 50% non-hydrocarbons or 40% non-hydrocarbons? Certainly not. So it's, as I said, it's a continuous journey. It's an issue of you need to take it one at a time. You need to look at this as a achievement when you have reduced your dependency or your budget on oil and gas. Now, it's not going to be bad if tomorrow the oil prices jump to be $150 per barrel. Perfect. We'll take bonuses this year probably, and we'll celebrate and we'll travel the world. But this is not realistic. And what is realistic now, and what we're seeing moving forward, is that the oil and gas industry is turning to be much more challenging compared to the past 30 days. Despite that, it is a finite source, and one time it's gonna end. Two, you need to think about future generations. We're talking, even if we're saying that gas is enough for the next 60, 70, 80, 90 years, you have 2-3 generations that need to come after us. What are those going to do? The third thing is basically the oil and gas industry is facing a lot of challenges now from an environmental perspective. And as Akbar has alluded to, you have a lot of challenges or disruptions actually to that industry, be it in terms of technology, be it shale oil, be it solar power, and be it the coals actually to reduce the CO2 emissions and greenhouse emissions, generally speaking. So as I said, there are two things that you can do, or two broad sectors you can look at, downstream, the national champions. But what is much more important than these two is basically creating new clusters and new sectors. And this really depends on what the country can provide and how much it can sustain these things. So manufacturing high technology content products like smart technologies or green technologies, for example, this is the way forward, right? You need to have an edge in this. And this is, as I think mentioned by Hassanin or Akbar, it's a race. It's, whoever first past the post, whoever gets there first will dominate the market for the next, God knows how many years. But the point is that you need to establish yourself in a certain very well-known advanced looking manufacturing business, for example, or in an industry that will create a demand for you. Now, the advantage for you doing so is you have the capital to do it, right? But what we also need is we need a contribution of probably talent from outside. But what will that create for you is the competitive edge, as I said, and it will create you new markets that you're going to start dealing with, and will create for you a diversification from, be it the exports, the customs, be it the taxes that you're going to generate, as well as jobs. Now, if we want to look just at the industries per se, I agree with Hassanin as that the basically the same list of industries or shopping list actually is usually provided by all countries who are looking to diversify. And again, these are very broad stuff, and you cannot say I'm going to tackle hospitality in general. What are you going to tackle in hospitality? Is your, for example, climate very well, will equip you actually to be, a country where tourism want to go to and want to visit. Rather, for example, Qatar, if you've seen, Qatar has been focusing on basically business business tourism, and that's a source of diversification as well, where they have been holding a lot of conferences and events and what have you. But I think in the financial sector, for example, I think fintech is the next generation now that will need to happen at some point of time. Whether now, 6 months, in 1 year, 2 years, it is inevitable and it's going to happen. So one of the things that the government can do today is basically to create this cluster or hub for fintech in the region. Other basically areas will be technological information, communication, logistics, and as I said, productivity or high-tech manufacturing sectors.
So clearly there is financial muscle to invest in this diversification, but one key requirement is that you have private sector participation as well. And as Akbar mentioned, I think the question Hasnan also had was whether we are naturally geared to attract that kind of talent. So that remains to be seen depending on the policies the government takes, and that's a much wider debate. Akbar, I want to move back towards you as an investor, and as Nasser mentioned, one of the considerations when moving away from diversification would be climate change. So is that something that, as an investor, that you see that the trend is shifting? Investors want to move away from companies that are polluting the world, that are not environmentally responsible, or that don't have a good social responsible program. So is that a factor that will actually drive, or will it be an additional incentive for diversification?
Sure. Well, I mean, the slide that you have on the screen talks about ESG, and climate change obviously comes under the E aspect. That there are obviously different ways that investors, global investors, when they're screening from a climate perspective, screen companies. One is what's called an exclusionary approach, which, to be honest, is becoming less and less popular, which is, you're an oil company, I'm not going to invest. You're a coal company, I'm not going to invest. While that does make headlines of XYZ endowment or XYZ company or XYZ pension fund divested, what is generally far more prevalent is where people take the best of class of each sector. So people will take the best, in the oil sector, the companies that do the best job in the oil sector. In the banking sector, the companies that do the best job within the banking sector, in the telecom sector, and so on and so forth. So if we do have listed companies which are in these areas and so forth, we do have a few names. So we have like Naqilat, we have GIS, we have a few other companies in MPHC, Industries Qatar, etc., are involved in these high carbon emission industries. If they are benchmarking themselves to their global peers and are towards the best of what the world is offering in terms of their peers, in terms of how much, what their emissions are like, then they will still get investment income or investment flows. But to me, the G part of the ESG is critically important, as is the S. The S has become more so in the last 6 months, because people are, companies that have taken care of their employees in the last 6 months will see a very different next 2 years, shall we say, versus companies that have not taken care of their employees during the pandemic. But the G is critical, and the G is critical, and then that is something which is not new, it's not a fad. The governance aspect of a company is what every investor, for as long as investing has been going on, has focused on. And particularly if you're a government investor, which is the majority of the listed companies in our region, are owned ultimately by the government, for you to have an efficient allocation of your own capital and to maximize the return of your own capital as a government, if the companies that you own have poor corporate governance, you will not have good sustainable returns on that capital. So for me, the improvement in the G, or in some cases the deterioration in the governance, is what's critical. And when we and my team look at companies in Qatar or in the region, that the quality of the management and the way that the management makes decisions and the way that decision making is done and the amount of focus or not towards minority investors is very, very important. So I take your point about E within the ESG, but I wouldn't underestimate the importance of the S and the G as well. And in particular, if you think about the S, if you look at companies, the products that we all buy from, over here, consumer products as an example, you know, when you're buying clothes, when you're buying electronic devices, etc., there is an increasing scrutiny on their global supply chains. If you're buying a mobile phone, whether it's from America or Korea or from whichever country, is there, what's the situation for the labor in the factories? When you're buying a $5 t-shirt, who made that t-shirt? What sort of labor conditions existed? So depending on the industry that you're in, investors will focus on the different aspects of it. But the future, it is clear globally, the future going forwards, in 5 years, in 10 years, in 15 years, it is a certainty that ESG is going to be a part of every major global investor's screening approach. So the vast majority of assets that are managed globally by 2030 or 2035 will have an ESG screening attached to it. So the Qatar Stock Exchange, and this is a plug for free, has done a lot of work in the region relative to other countries in the region in trying to promote ESG in terms of forcing reporting. All these are very welcome steps. This is going to be, you know, in 15 years from now, we'll look back and think, how is this ever an option? This is just how we do business. So I think that's critical for policymakers to understand at all levels.
Sure. And I think if we continue to, let's say, subscribe to Hasnan's thesis on sticking to old model, because diversification is not, from an investment point of view, a feasible option, then Qatar, being the gas or LNG country, exporting country, is relatively a cleaner fuel, less evil in that sense. So it will tick the boxes, I think, from an ESG perspective, if, as you mentioned, companies will look for the best in class when it comes to the E or S or G. So I think either way, it seems to me that if, as an investor, you think that Qatar or the whole region cannot diversify, then Qatar seems to be the best choice. And if you think diversification is not a question, it has to be done, then again, Qatar, Kuwait, and UAE, for that matter, are very well positioned to at least finance that diversification. However, on that point, I think I would like to again subscribe back to Hasnan's argument around cannibalization, because given the proximity of the countries, if we all start to develop the same sectors, the same hospitality or logistics or this or that, then perhaps it's again an arms race. Who does it first? Who does it better? But it is, from a region's point of view, it is cannibalizing. So on that point, I think I would like to move towards, because the questions from the audience would be similar that we have been discussing, but I would like to move towards an audience poll to see whether there has been any change in the way people think. So I'll launch the poll now.
If I can, sorry, if I can just interrupt, and maybe just what you said raises a point. I actually think Kuwait and based on Hasnan's charts, where Kuwait, Qatar, and the UAE, and I guess in that really it's talking about Abu Dhabi, are the most blessed in terms of their wealth and their savings. I actually think that puts them at the biggest disadvantage, because when you are as rich as they frankly are, the desire to really commit to the changes that are needed to make the private sector blossom are sort of a nice to have rather than a must have. And it's very easy for policymakers to drag their feet and not put in the essential changes. Whereas when you are in a situation like Bahrain was a while ago, and you look at the development of the amount of diversification that Bahrain has done, the quality of regulation, the ease of doing business, the way that so many of the other aspects of Bahrain are, I think those changes were made because, frankly, there was no other choice. And so the worry is, if you like, is that the rich countries of the Gulf will really only start to diversify when they have no choice. It's very difficult to do it, to make the changes, to let go of the control when you feel you have hundreds of billions of dollars still in the bank. But hopefully, Nasser and his team prove me wrong.
Nasser, you want to respond to that?
Let me reflect. Diversification is, as we talk about it today, it's an aspiration. It is somewhere where we want to be in 20 years' time or 15 years' time. Where I completely agree is that it is no longer an option, right? For so many countries, including the GCC countries, and in particular the GCC countries. Qatar in particular, I would say that we are in, in a very, in a position right now to, move on with our diversification agenda. Not only because of the, so if you look at the trajectory from the 2008 until today, you had the 2008 Lehman Brothers, and then you had the drop in prices in 2014, and then you had the illegal blockade against the state of Qatar, and then you had the COVID, pandemic in early 2020, end of 2019. All of these events are telling you one thing: your source of revenue is good. It's giving you a lot of money at the moment. However, it is not sustainable. And it's not sustainable, as Akbar has said previously. It is not only not sustainable because, it's finite. It's going to finish at some point of time. No, it's not sustainable because it may not be worth as much as it is worth today. So this is why there's a huge move towards diversification. And again, I would reiterate, if diversification today is a topic of discussion, believe me, in 5-6 years time, it's not going to be a point of discussion. It's going to be a must. It's going to be the difference between people who are going to leave the market or who are going to live with a certain conditions and they're going to accept it, and people who would challenge the status quo and say, no, we want to actually move further.
Here, I think I just want to make things a little bit interesting here. Towards the end, just give me one word or one sector that you think the governments should focus on, or the private sector should focus on. And tell me one sector that you think should be developed for diversification away from hydrocarbon. I'll start with Hasnain. He's our guest.
So one line, 3D printing based manufacturing.
Akbar, you're on mute, Akbar.
I would say high performance materials. So we make materials, but improve the technology and R&D and sophistication of them. I don't know what the one word description of it is, but that's what I'm trying to explain.
Nasser.
I always lean towards the financial sector, so I would say fintech. However, surprisingly, I also would argue for agri-tech. We have seen countries in the Middle East who have been surviving and actually doing really well on developing the agri-tech technology. I'm not saying that Qatar is the best place to do that in it, but I think we need to be a hub for R&D for such a thing.
Hasnain, if I could pick your brain on 3D printing that you mentioned, do you think this would become, again, a sector which everybody wants to jump on and then the cannibalization starts to happen? Because it's very easy for that.
Yeah, it's certainly possible, but the costs of that duplication, the results of that duplication are far less damaging than tourism, than another university, than another free zone financial center. Reason being that your ability to repurpose a 3D manufacturing facility is far easier than a free zone built for a specific sector, or a set of hotel assets that frankly look exactly the same in terms of what they're offering as a social or a physical environment. So yeah, I agree that it could be, duplication is going to be a fact of life for this region. And we're just talking about the GCC here, not even talking about the wider Middle East. As long as there are 6 countries governed completely independently, and some of them like the UAE with a number of provincial governments effectively. That's inescapable. That's one of the reasons why, as I say, diversification is such a tough prospect for a private investor to think about making very interesting returns here. totally different from a government perspective. Government's priorities are not simply shareholder return, they're citizen welfare. But for a private investor, I think it's very tough to make the case for juicy returns that aren't a case of piggybacking on what the government is prepared to leave for you in this region.
I mean, we had a question on knowledge economy also. I think Qatar's stated national vision is to move towards knowledge economy. But that, I mean, somebody wants to take the question on that, Nasser?
Yeah, I'm happy just to give a couple of points of view on that. I mean, so what does a knowledge economy actually mean? It means that you've got highly skilled people who aren't making things in terms of physical product. Instead, what they're doing is it's sectors like marketing, banking, media, entertainment, academic research, R&D. To do that, you need a skills base. The GCC has done a pretty good job of upgrading the skills base of its citizen population, and of course has always had unrestricted access to expatriate skills. It goes back to the point that it's not just about improving the quality of education and the education attainment level of the average citizen. It's all about how do you create an incentive mechanism for pricing that skills base competitively. And that's going to be a challenge where there's been a generation that's been brought up on relatively lucrative, secure public sector jobs. The other issue when it comes to a knowledge-based economy is if you look at the centers of R&D and academic research, there is a certain unrestricted freedom in how that research is conducted. And if you look at the, I would say, patchy success of universities in the GCC, where there's been this model adopted of joint ventures between overseas established universities and local sponsors. And we've seen something similar in schools. I think most people would agree that those joint venture universities have not offered, and joint venture schools have not offered the same standards or environment for raw academic research and academic freedom that you've seen in the countries from which those universities hail. So those are the challenges. Yeah, it sounds great. You know, go for a knowledge-based economy. You don't have to worry about not having a lot of scale in your population workforce and a lot of cheap labor for traditional manufacturing, but it's far easier said than done.
With that, I would like to end the poll, and then we'll share the results with everyone. I think Akbar has done a great job in telling people to move towards Qatar equities. So well done, Akbar, and Hasnan also for telling the audience that Qatar is the best story if diversification is not possible. So perhaps you have also made your case that, yeah, diversification is not happening, invest in Qatar. So Nasser, I think something for you to ponder on. In terms of sector, yes, consumer sector, this is a change from what people thought initially. Consumer sector is actually doing much better and recovering better than other sectors. People like to invest in ETFs. We have two ETFs listed in the Qatari market. One is a conventional and the other one is a Sharia index-based ETF. Yes, we are starting to see people more and more investing in a diversified portfolio. And it's ironic we had a discussion on diversification, but ETFs do offer diversification and hence they are becoming popular. There's no change in where people think the index will end towards the end of the year and the oil prices. In terms of also what it means for people in the attendees about diversification, a lot of them think that development of new sectors is needed. So Hasnan, I think your point on 3D printing, high-tech sectors is probably hitting home. So this is, again, these are all insights which we will take back and discuss internally in Qatar. Nasser, I hope you also had some good feedback from the audience, the participants, the panelists. And let's keep the conversation going. I would like to thank all the three panelists, Hasnan, Nasser, and Akbar, for joining us today, and all the attendees who have joined us today. It has been a good discussion, I think, and hopefully we will meet again in September with a fireside chat with one of the leading emerging market investors of the world. So till then, thank you very much, and God bless you all.
Thank you.